This is Versed, powered by VIUM Capital, the podcast that brings you conversations with the leaders driving change in seniors housing and healthcare. I'm your host, Steve Kennedy, and together we'll explore the insights, challenges, and solutions shaping our industry. Well, welcome to the latest edition of the Versed podcast, powered by VIUM Capital. Thanks for tuning in, and I'm very pleased to have James Balda, President and CEO of Argentum, as our guest today. James, welcome to the Versed podcast.
Well, thank you for having me. I'm thrilled to be here.
So, James, you and I know each other just from both of us being in the seniors housing industry for a few decades. And we've had the opportunity to work together as recently as just this past month with your team's great work with FHA Commissioner Cassidy and a group from your Argentum's Capital Advisory Board. But for those folks who might not be as familiar with you and Argentum, why don't you give a little bio about who is James Balda, and then what does Argentum do for our sector?
Yeah, sure. Thank you, Steve, for having me, and thank you for joining that meeting with the commissioner, and looking forward to talking about that and some of the great work that's going on. So I've been with Argentum now a little over 10 years. Believe it or not, I'm an association professional by background. That's an actual thing. I didn't know it was. I fell into it working data entry part-time in college, way back with the newspaper association when newspapers were a thing. But just have stayed in the association space. I love getting into an industry, going long and deep on a particular industry and sort of understanding what makes it work. I went from newspapers into healthcare and health insurance, all through sort of a lot of those public policy debates, and then found myself with the National Restaurant Association in the middle of the Great Recession, which wasn't a great time for restaurants, but the industry came out of that. And then that was sort of how I found myself in senior living. It was sort of a combination of the hospitality and the healthcare background. And I received a phone call about this organization called ALFA, the Assisted Living Federation of America. And I said, well, what's assisted living, right? Everybody has that question at some point, unless you've been in the industry for years and years. And as I learned more about it, I became fascinated by it because it was this sort of combination of everything. It was healthcare, hospitality, real estate. I mean, everything sort of all under one roof, and all with an objective of caring for seniors who in some cases are, our most frail population. So I was fortunate enough to be offered the job, and I joined ALFA, and we went through a rebranding and changed the name to Argentum. People often ask me, well, what does that even mean, Argentum? Are you a vitamin company? Are you a mining company? What is that? And really, it was our leadership was looking for something different and unique that sort of called out what we aspire to be, which is the best possible thing we can be in terms of caring for seniors. And Argentum is Latin for silver, which is a standard of measure and certainly a nod to those that we serve. And so that's how we went from being ALFA to Argentum. Our role as an association is really to represent the senior living industry, be its advocate at a national level, certainly with federal lawmakers, but also at a state level. Now we have state association partners that execute at a state level. Our role is to support them financially and otherwise. And we tend to think about states not as one state, but there's 50 of them that oftentimes deal with a lot of the same issues, whether that's tort reform or camera legislation or staffing mandates. And so how do we think about that from a national strategic perspective and then support our state partners in the best way possible? So that's really our biggest focus, is being an advocate for the industry.
Thank you for that summary, and for emphasizing too just the work you do at the state level. My mind goes to a recent Verse podcast we had that focused in part on Medicaid waiver assisted living and how different that is state to state, even though it's a national issue that's evolving. When you talk about Argentum at the national level right now, what are the two or three biggest focuses for you and your team in advocating for your clients?
It's really actually pretty simple. So I tend to think about two key drivers that impact the industry. It's access to capital and it's access to workforce. And without either of those, we can't do what we do every single day. And so in the simplest terms, that tends to be where we focus. certainly a lot of it is about educating lawmakers and ultimately preventing sort of unintended consequences or sometimes intended consequences to sort of impose a regulatory structure at a national level on assisted living. And we think, and rightly so, it should be at a state and local level, which is where it is and how it should be. But really, it's that access to capital and access to workforce that we focus on mostly. And when I talk about access to capital, there's sort of two levers to that in and of itself. Certainly, access to capital to help the industry grow and develop, but also access to capital as we think about residents and their family members to pay for their long-term care costs. We were talking about Medicaid. That's certainly a lever that the government has to pull to ultimately help people with their long-term care needs. We're predominantly a private pay market that serves, a certain segment, but you've got this vast 14 to 16 million people in the coming years in the middle market that won't be able to fit into either of those two buckets. And really, we're approaching the point where talking about retirement security for that population isn't an option anymore, right? We've gotten to the point where they just won't have the resources and won't be able to save for the resources to pay for their long-term care needs. And so how do we help their families from an access to capital perspective? How do we make things like 529 accounts accessible to them to pay for long-term care costs? And so those are some of the conversations we're having as it relates to helping residents and family members.
Yeah, good clarification. When I think of access to capital, understandably and a bit biasedly, I think of access to debt capital markets and equity in projects. So thank you for clarifying sort of that two-pronged difference in definition. And you talk about, those aging and some being able to afford assisted living and independent living and memory care, and some who can't. Talk about the supply-demand imbalance in senior housing today. And we hear about a projected shortage of senior housing over the next decade. We've seen that there's not been much new inventory added, since the pandemic. How real is that over the next decade?
It's unfortunately very real, and it's one of those things. That's one of the things that keeps me up at night, because it just becomes a vicious cycle if we can't improve the pace at which we're developing. All we end up doing is scarcity creates higher costs, which prices more people out of the market, and we already know we're serving a small portion within the market. And so that supply imbalance is real. I think NICMAP has estimated that we're almost 900,000 units short in the next couple of years of where we need to be, about $1 trillion of investment ultimately needed. And that'll just continue to get worse the longer that goes on. And it takes a couple of years, even once you get capital, to build a new community to even get it up and running. And so it's going to take a while for us to sort of start to close that gap. And what we try to tell lawmakers, and certainly folks in the industry, it's not about overbuilding, right? We've all been through that cycle just a few years ago before COVID where there was overdevelopment. But it's not about overbuilding. It's about underserving seniors in the future. And so anything we can do to open up capital and diverse sources of capital into the market to help with development, I think is going to be critical. And you've got some markets that are even going backwards in terms of total inventory available from where it was just a few years ago. And that's really what worries me, because it just means more seniors are going to be left sort of trying to solve this on their own when they actually need the care that we provide.
And what do you look at as the primary headwinds? Why, from your chair, do you think there's been a lack of development of new inventory over the last few years?
But coming out of COVID, there was certainly the cost of capital had gone up, right? Cost of development, construction itself went up. I think that was sort of the first piece. There was also some residual hangover, so to speak, about investing in an industry that had been so impacted by COVID. But when I talk to a lot of owners or potential owners today, it's not just those issues. It's also a little bit of uncertainty around what the future is going to look like. And we all know the demographics, right? That's not speculative. The numbers are there. That's not going to change. But it's what are policymakers going to do that could potentially impact this market, right? How are we thinking about private equity? And we've all heard the debate about private equity and healthcare. But that uncertainty gives people pause before they're willing to put capital into the industry. The prospects for the industry are incredibly bright, and I think we're starting to see more capital come in. But I think there's some hesitancy because of things like that. Litigation risk is also another one. We all saw the recent jury award out of California. And I think that's going to give some capital some pause in terms of thinking they want to enter the space. And so we just, one, need to educate them and lawmakers about truly who we are and how we're different from the broader healthcare sector.
Yeah, and you mentioned private equity, and we're seeing growing scrutiny and proposed restrictions on capital, in particular private equity in parts of the healthcare sector. How concerned should senior living providers or the senior living industry be about being swept into that conversation?
I'd say pretty concerned. So far we've been able to skirt most of it. We're seeing things in Minnesota, Pennsylvania, Ohio, certainly that impacts healthcare, skilled nursing, hospitals. We started to get wrapped up a little bit in some of that. I think the biggest thing that probably sort of gave me pause was a short time ago, Senator Markey introduced a bill at a federal level that was restricting private equity. And to be clear, when we talk about private equity, we need to be clear that we're not talking about just private equity in terms of this conversation. We're talking about private capital is ultimately what's under attack. And so Senator Markey introduced a bill that was restricting private equity in healthcare, and it included assisted living. Now, we were ultimately able to get assisted living carved out of that. And I think a big part of the reason was our economic model is completely different and uniquely different from the rest of the healthcare system. So when you think about hospitals, when you think about skilled nursing facilities, any other element of the healthcare system, they're directionally 80 to 90% third-party payer, which means the consumer of the product actually isn't the payer of the product, right? It's Medicare, it's Medicaid, it's private insurance. We're the exact opposite. 80 to 90% of our model is private pay, which means our customer is the consumer is the payer, whether it's the senior or their family member. And if if capital comes into our space and tries to cut staff, tries to cut corners, reduce amenities, ultimately that resident and their family are going to decide to move down the street. And so it's a completely different economic model. And I think educating lawmakers on that is ultimately how we got assisted living pulled out of that Markey bill. That bill wasn't going to go anywhere, but you never want to be included in the bill because they just get regurgitated over and over and over. And we saw another bill introduced shortly afterwards. And once again, assisted living was pulled out of that. So we were able to do that at a national level. Whether or not that can happen in all 50 states as this continues to progress remains to be seen, but the industry is pretty focused on it, and we're working with other stakeholders to make sure that we're protecting senior living.
If we pivot a little bit to debt capital markets, I think in general, when we think about debt capital for assisted living, memory care, independent living, we think, of course, of bank capital and non-bank capital, but permanent financing, the GSEs, Fannie and Freddie, have played a very important role historically in providing permanent capital. We know COVID, hurt the agencies, and they've been, a little slow to come back, and understandably so, given some of the assets in their book. But we also have HUD as a permanent funding alternative. Now, probably 3/4 of the HUD 232 book, which is, as the HUD program focused on healthcare and senior housing, over 2/3 is skilled nursing. And that's been really, there's GSEs don't play in the skilled nursing space. But comment on from your chair, where the GSEs are right now and the positive momentum you see with the HUD 232 program, including some of the things we talked about in DC with Commissioner Cassidy and his team.
So, and I'll be the first to admit, I'm not an expert on sort of the whole capital stack, but it is a diverse capital stack, right? And so GSEs play a role. My sense is they've been very conservative coming out of COVID. I am hopeful. Certainly, we're hearing about the possibility of them going public again, right? And so I'm hopeful that at some point in the future that'll loosen up a little bit. I think what HUD is doing, and a tremendous thank you to Commissioner Cassidy for everything they're doing there. I think that could send some positive signals that, this is a market that everybody should be investing in. I mean, the conversation we had with him was eye-opening to me when we were all in DC together a short time ago. And I'll be the first to admit I was skeptical when I heard about the express lane, and I was talking to some of our members and others about it. And I got the sense they were pretty skeptical. Oh, it's, another agency they're going to do something different. Okay. Well, they actually did. And so fast forward 9 months later, I'm actually talking to members, and they're, pretty excited about what's going on. And it sends a signal, not just to the GSEs, but I think to the broader capital markets, that senior living is open for business, right? If HUD's going to be sort of moving things along and modernizing in our space, I think other capital sources could follow suit. So I'm optimistic, and certainly appreciative of everything they're doing. Now, certainly there's always more that can be done. I mean, that. And I think the commissioner heard that as well and is open to some of those ideas.
That's well articulated. And for those that aren't as familiar with the HUD 232 program, I mean, just a few sort of underpinnings as we look at that program right now. That is specifically designed for properties that are licensed, skilled nursing, assisted living, memory care. And, we've seen, volumes in the program tended to be around $4 billion a year, give or take. But now we're talking about volumes. This past government fiscal year was over $6 billion in closings, around $8 billion in commitments. We expect fiscal year 2026 governmental year, which we're just about halfway through. We expect it to be an increase to that number again. And the beauty of it is, remember, these are deals that they're stabilized transactions. These are relatively low risk deals. And what Commissioner Cassidy's done with the express lane that you mentioned, those projects are below 70% LTV. They're proven operations. And I think we all recognize the importance of making sure we keep that HUD portfolio of assets strong and have a strong debt service coverage and minimal defaults, because at the end of the day, the surplus that's generated goes down to pay the deficit. And so what a great bipartisan program that is help providing some stable, cost-effective, term-favorable capital to those owner-operators that are providing this such important service to our aging Americans.
Funny you say that. I was thinking after our meeting with the commissioner, a lot of what we talk about in terms of senior living is the value we provide to the broader healthcare system, right? So we actually save Medicare money. We actually save Medicaid money because we're keeping people out of, off of Medicaid waiver programs. And where there are waiver programs, we're a much more efficient model. But I hadn't really thought about what HUD does and the fact that they are actually generating revenue for the government, right? So that's another sort of quiver in our another arrow in our quiver to be talking to lawmakers about. And now we can't take credit for it, right? The commissioner and HUD they're the ones running the program, but it's just an example of where this public-private partnership really does work well and supports the broader healthcare continuum.
That's well said. Yeah, and the importance of providers, vendors to the industry like us, associations, being able to accurately and concisely articulate that to congressional leaders is critical. I know you're in DC all the time. I'll be in there mid-May or mid-April for a national advocacy conference with NBA. And that's one of the messages we continue to carry. And it's been, I think, very effective to date. Maybe one other business related question, and then I'll pivot to a question I ask everyone at the end of these is, coming off that meeting with Commissioner Cassidy and the work that we're doing as a part of the Capital Advisory Board you've put together, what else would you like to see from HUD and realistically see? We know that, there's limitations to whatever program can do, but what are some things you think are important for HUD leadership and us that are advocating with them to focus on?
I think there's more HUD can do, and so I'll talk about that. I think there's more just policymakers in general can do, and I'll touch a little bit on that. As it relates to HUD, well, certainly more of the same, right? Just the streamlining, from what I've heard, has been incredibly helpful. The independent living piece, as you mentioned, is incredibly helpful. The 3-year seasoning, right? I think that's an issue. We'd like to see if we can get that addressed. I think that would help open things up for the market as well. And so in terms of messaging with HUD, that tends to be where I tend to focus. But a little more at a 30,000 foot view level, though, I think there's opportunities for us to do much more. I tend to think about the low income housing tax credit, and this on the Medicaid side. In some states, the LIHTC program with decent Medicaid reimbursement actually creates a really strong assisted living model. And so, but oftentimes we don't get access to those tax credits, right? They get consumed by multifamily housing. So how do we get policymakers thinking about either an expansion of the program, which expansions of government programs are never well received, or some way to create something unique for seniors housing in that space? I also tend to think about the middle market piece, and not that there's any appetite for a middle market or a middle income housing tax credit, but are there opportunities for us to at least rethink some of the income thresholds in the LIHTC program? So perhaps we could start getting just above that Medicaid threshold, right, and serving the lower section of that middle market with income qualified housing that could be a little more appropriate. So those are a couple of things that we tend to think about. But I think just getting lawmakers in general to think about the opportunities for the private market to ultimately take pressure off of Medicaid and Medicare, and Medicaid in particular, is critically important moving forward.
Yeah, that's a great example of just private-public partnership, but doing it in a way that makes sense for all parties. Commissioner Cassidy and U.S. Senator Bernie Moreno were here in Columbus a couple weeks ago, and one of the things Senator Moreno, who's, as you know, on the Senate Banking and Housing Committee, talked about was changes to tax credits, and you start to see a conversion to tax credits. Sometimes people only thinking about affordable multifamily housing, but we've seen it successful in states like Illinois with their supportive living program. Tax credits. Back in the day, they used to be able to get some competitive 9% credits. Now it tends to be 4% credits. But that does become such an important part of the capital stack when you're dealing with, by nature of the business you're underwriting, limited margins and keeping rents affordable for seniors. And then at the beginning, you mentioned, just to drive a fine point on this, the 3-year seasoning. And I'm glad you brought that up. And you're referring there to right now, HUD 232 policy says, hey, you can, after you build a new facility, you need to wait 3 years from certificate of occupancy before you can submit your HUD application for refinancing. Well, if an owner operator develops a property, leases it up quickly, and is ready to go get permanent financing in less than 3 years, which does happen, what a great way to get into permanent financing quicker than that. And now that HUD, it no longer requires that on the multifamily program, which in some cases tends to lead it with policy change. It's a bigger program. But I'm glad you highlighted that. And I think after that conversation, I think we're all cautiously optimistic that changes like that can continue to happen as Commissioner Cassidy and his team see openings to drive that.
So the market realities today in terms of occupation or occupancy are much different than they were just a few years ago, right? I mean, so that scarcity of supply has been helping occupancy improve. So a new building today will most likely scale up much more quickly than it did in the past. So hopefully they will sort of follow suit.
Well, James, as we wrap up, I always like to ask, who is or what is maybe your favorite podcast or book? I know you're an avid listener to the wonderful podcast Versed, powered by VIUM. But
number one.
How would you respond to that? A favorite book or podcast that our listeners might value and learn a little bit more about what you're into?
So I do enjoy Versed, but outside of the senior housing space, because there are other senior housing podcasts, I don't want to disparage anyone. I'd have to say there's two that I particularly enjoy, and one is Acquired. I don't know if you're familiar with the Acquired podcast. They go like 4 hours long and deep on a particular business, or they've gone long and deep on the NFL, or and that's just fascinating to me. And my family can't stand it because I come home and I talk about how Costco hasn't changed the price of hot dogs and a soda ever, right? So, and it's all this useless information, but it adds up. So that's a good one. And then I do enjoy Freakonomics Radio also, which is another, it's sort of similar, but they just get you thinking about things differently. And I constantly find myself having to go back because I'm listening to it. I'm like, well, how does that apply to senior housing? And I start thinking down a different track, and I missed the last 5 minutes of what they were talking about. So those are two of my favorites.
That's great. Well, I think you and I have similar taste when it comes to sort of outside our sector, what to listen to. My favorite podcast is by a guy named Guy Raz, and it's How I Built This, or How They Built This. And it's a great story about entrepreneurs and how they build companies. And no matter what sector it's in, you can always relate it, I think, back to your own business or your industry. So anyway, thanks for sharing that. Well, James, as you know, I appreciate what you do. You're doing a great job leading with this Capital Advisory Board and Argentum, and the conversations I know continue with Commissioner Cassidy and his team. But thanks so much for your advocacy, and I really appreciate you being a guest on Versed.
Well, thank you for having me, and thank you for all of your help on some of these issues with HUD. And like I said, I'm not the expert. I need you at the table to actually talk about the issues. So,
all right, good. Well, it's opening day, the day we're filming this. So good luck to your Nationals and good luck to my Reds.
Yes, definitely.
All right, thanks for watching this latest episode of Versed, powered by VIUM Capital. Thanks for tuning into Versed, powered by VIUM Capital. The conversation doesn't stop here. Let us know what topics you want to hear, and let's make an impact in healthcare and seniors housing together. Until next time, I'm your host, Steve Kennedy, and this is Versed.